Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So yesterday performance is very representative. So actually we haven't need to do anything to get the answer on the question that we actually talked about and asked with the previous few sessions starting the weekend. So the major concern was about this action. If you remember what we have here, whether it's upward continuation or this is just a retracement before another test of the lows. And recent performance tells, and actually answer comes not only from the euro currency, we also see this corresponding action on other markets, that probably this is the upward performance. And here's the facts that we have. First of all, if you take a look at the 10-year bonds, we see very strong upward action on the yields. So market actually has reached the 4.65% recently. It was really very fast jump. Yesterday I already explained that currently with the new strategy of the Ministry of Finance, they're trying to contract the amount of the short-term borrowing in the bills and transfer it to the longer-term bonds, but demand for the longer-term bonds are lower and investors do not treat them as absolute safe. So they will definitely ask for the higher yields, and actually this performance is important, but the performance important here is not by itself, but in conjunction with the performance of the dollar. And if you take a look at the dollar, you could see that on the dollar we have opposite direction. So grabbers that recently has been formed had been erased. Market now is turning down, and it means that these grabbers that we have are still working, and that suggests the taking out of these lows. So this suggested further weakness in the dollar. Why it is important? Usually, as you know, the rising of the yields is usually accompanied with a stronger dollars, upward action on the dollar. Currently, you could see the opposite thing, that the high yields accompanied with the weaker dollar. What does it mean? It means that the high yields is a result of the dollar drop. So investors actually demand more premium for the risk, and it means some weakness of the in general basics of the United States economy. So the yields going higher based maybe on inflation, while the dollar is becoming weaker. So in fact it might be the effect of the sell-off. So investors start selling of the bonds, yields is going higher, and since they're selling American assets, they do not need these dollars, and dollars going lower. That might be treated as an initial to what has happened in a few sessions. That explains the overall situation. So this combination is not good for United States dollar in general. So, and the result you could see on euro currency. Euro currency was rising. Here on euro, probably, so on the daily chart, we do not see big difference. Trend at the verge to turn bullish, as you can see by the MACD. But overall, the picture remains the same as we said. Market right now is flirting with our invalidation point for this bearish scenario. But probably we do not need it anymore. So here is better to take a look on the hourly chart first. Recall what we talked yesterday. Yesterday was at this point. We said that bears, if you would like to, this is the point where you have to make the decision on position taking. For the bulls, we said wait and see for breakout and coming of the market back to the invalidation point. And that was the reaction. CPI was significantly higher for the 2 decimal points. This is big changes for the CPI, especially if you remember how they actually manipulated this indicator. But even this manipulated indicator has been released with a high inflation. You can see corresponding reaction, very good result. So in general, even late it has been reversed. That was good reaction on the resistance that we had. And actually those who have taken short position hardly get some problems with this, because it's actually great, about 60 pips downside drop. But Now, for us important, the next step, what has happened later. Let's take a look that despite the stronger CPI, market has reversed this position and keep going higher. This is very important. In the currency, everything actually goes against the euro. We have great inflation, some passions on the dollar index, performance on 10-year bonds, but despite all these headwinds, price has changed direction and overcome these problems and actually going higher. It means that here stands strong bullish sentiment behind the euro currency, but better to say, I would call it more like the weak sentiment behind the dollar rather than strong behind the euro currency. But anyway, so you can see what performance we have. Correspondingly, in the current situation, we are not considering taking short position. Concerning the weekly double repo, yes, it seems that we are getting double repo look-alike and market is going higher. The result of the double repo, usually the 50% resistance, which is 107 here on the weekly chart. If, of course, something radical will not happen in the nearest few sessions. So, based on the technical background, that's approximately the target and the situation with the pattern that we have on the weekly chart. Correspondingly, on the 4-hour time frame chart, you could see what's going on. So market also has broken through the last 618 resistance. Here we do not have any other resistance levels until this top, because on the daily chart you could see that the next resistance will be only this confluence. So because resistance from that level also has been broken here, there's no new lows, so this fib level is not actual anymore, so we could just keep going higher. And on the fall time frame chart, we could wait for some reaction, some retracement here for position taking. If we will get market somewhere retracement back to the trend line or 103.50 area, some retracement down, that's the one thing that might be interesting. So, but we should keep an eye on any retracement that will happen. Maybe it will be just minor 30% retracement back to the 103.90. So it's also possible. Just be careful and carefully watch for pullbacks, and let's see how we will be able to take the position. Because for now, on the hourly chart on the top, we do not see any signs of the retracement by far, except maybe this is some kind of the resistance area as market stands right now. So here's maybe recognize the kind of the hand and shoulder shape. I don't know, but anyway, if we will get retracement somewhere in the area of 103.80, 103.90, and also might be considered. So, speaking shortly, the bullish context that we discussed previously by the recent action mostly has been terminated. Now, overall background suggests bullish sentiment, and as a result, we're watching for dips to possible taking a long position.